Good evening, everyone. Welcome to the channel. Today I am going to talk about Qunabox Group interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Qunabox Group Limited offers a diverse range of businesses and services, including marketing promotion, AI interactive and big data products, merchandise sales, fast-moving consumer goods through vending machines, and online platforms, IT system development, software development services. The significant drop in Qunabox Group's stock price over the past year can be attributed to several key events. The company's financial results showed losses for both 2024 and the first half of that year, primarily due to fair value losses. Additionally, a discounted share placement was announced, which led to the dilution of existing shares and further downward pressure on the stock price. These negative financial news and the share placement likely contributed to the substantial decline in Qunabox Group's stock price, with a 52-week trading range indicating a drop from $137 to $43.40. The primary drivers of revenue growth are multifaceted, with several key factors contributing to the company's success. Marketing services experienced a significant 37.9% growth, while value-added marketing services sector saw a substantial 63.1% year-on-year increase. The average revenue per customer also rose by 52.2%, driven in part by innovative business models and strong service capabilities. Additionally, the expansion of AI interactive terminal networks and the introduction of new selling point databases and pre-scoring services for beverages and snack food contributed to revenue growth. Furthermore, supportive policies from China's government, such as those promoting industry development and consumption markets, also played a role in driving revenue growth. The company's ability to combine standard marketing services with value-added marketing services modules, as well as its continuous enhancement of service and operational capacity, further contributed to its success. Overall, the company's diversified approach to marketing and its commitment to innovation have been key drivers of revenue growth. Net income and profit margins. A shift from loss to profit in 2025. The company's net income turned from a loss of RMB-1,846.2 million in 2024 to a profit of RMB-128.4 million. This significant change is attributed to improvements in both gross profit margins and effective tax rates. Gross profit margins increased from 54.6% to 57%, driven by a higher growth rate of gross profit, 37% YoY, compared to cost of sales, 24.4% YoY. Additionally, the effective tax rate decreased from an unspecified rate in 2024 to 8.7% in 2025. These changes collectively contributed to the company's shift from a loss to a profit, demonstrating a positive trend in its financial performance. The company is indeed generating positive operating cash flow. This can be seen through the significant increase in cash generated from operating activities, which has contributed to a substantial rise in cash and cash equivalents. Specifically, net cash flows from operating activities have increased from $79,373 in 2024 to $216,443 in 2025. Indicating a notable improvement in the company's ability to generate cash from its core operations. The company's debt level and interest expenses have undergone significant changes. The debt level has increased by 27.4% from RMB 426.8 million to RMB 544.7 million, indicating a substantial rise in the company's financial obligations. Similarly, interest expenses have more than doubled from RMB 3,998,000 to RMB 9,460,000, highlighting a considerable increase in the company's financial burden due to debt servicing costs. The company's financial performance was mixed across various segments and regions. Notably, corporate/information/marketing services and merchandise sales performed well, with revenue increases of 37.9% and 6.1%, respectively. Cities with high potential such as Hangzhou, Chengdu, and Chongqing also showed strong growth due to terminal network expansion. On the other hand, other services struggled, with a mere 0.2% year-on-year increase in revenue and a decline in gross profit. Additionally, despite merchandise sales revenue growth, its gross profit decreased, indicating inefficiencies in this segment. Management's outlook on company strategy. The company management is optimistic about its financial outlook, expecting to meet liquidity demands through a combination of operating cash, bank borrowings, and other funds. They also highlight that the business has no significant exposure to foreign exchange risk, providing stability in their operations. In terms of strategy, management plans to invest in key areas such as technological capabilities, R&D efforts, digital systems, and personnel recruitment, using a portion of the net proceeds from the global offering. This investment will likely enhance the company's competitiveness and drive future growth. There were no notable acquisitions or divestitures in the company's financial activities. This indicates a stable and conservative approach to business expansion and restructuring. The company's financial summary reveals that it has chosen not to distribute profits in the form of dividends. Instead, it may be allocating funds towards other priorities or investments. This decision suggests a focus on growth and reinvestment rather than shareholder returns through dividend payments. That concludes the financial summary for Qunabox Group. Feel free to comment below, and I will be happy to answer them when possible.